See, if you frankly ask me that what was the standout trend for the week on by, the standout trend frankly was that it was a busy week, but Nifty in a sense really struggled to go past key levels, and it, despite the push which came from the earnings season, Nifty did not go above 20,000. So have markets hit a pause button, but the pause for benchmark indices does not mean that it's pause for the entire market. B, at best you would say that FI flows have been mixed, and this could be a function of block deals, it could be a function of what is happening in terms of the P deals, but the FI flows at best you would say is actually mixed. And Indian markets actually have underperformed global markets. Now the last one I think is the most important one. After months and weeks of outperformance, Indian markets are underperforming global markets. So while I will not read too much into last week's price action, I guess for me the view is pretty much the same, that for large cap stocks you need to, the triggers are not there and they could easily get into time wise and price wise correction. The froth in the mid and the small cap space I think is something you got to be careful of, and given what is happening to flows, global macros, commodity prices, it may not hurt you if you take some profits off the table. It's never a good sign. It's never good news if you advise somebody that take some profits off the table. But I think this would be a sensible advice, given that the levels and how things are stacked up, at least for markets in the month of August.
Oh, well, yes, it seems to be turning a bit. So after almost we are trotting towards that 5 consecutive months of gains, and history has told us that after we hit that 5-month gain mark, there is a bit of reversal that happens, and we are just at the cusp of that. As we were talking about, FI selling over the last couple of days has intensified, and even the long short portfolio at the start of the series has come off a bit. But Nikunj, earlier we were talking about how it's good to be lazy in this market, right? Now it has changed. You're saying you need to relook at your portfolio?
No, all I'm saying is start taking some chips off the table, whether it is mid cap, small cap and large cap. Large cap, I think will hit a pause button, book some profits. B, don't allocate fresh capital in mid and small, especially in small cap stocks. It's not the time when you want to invest fresh. It's a time when you want to perhaps use the strength to your advantage to raise some cash. And why I think it would be a good idea to raise cash right now. First, let's look at the month of August. There are no triggers in the month of August. Earnings season done and dusted. If one really looks at the historical stack for the month of August, August has been a difficult month to call, and history tells us that August in a sense has been a mixed month. See, commodity prices have started moving higher, and something you really need to be watchful of. Let's look at crude. Let's look at the dollar interplay. We'll discuss it again at detail at 8:30. But I just want to, bring this part out, which is something is getting ignored right now. Gold prices, copper prices, silver prices, crude prices, energy prices, they are moving higher. China seems to be reporting data which is far more encouraging and seems to be indicating that the Chinese economy is recovering. The dollar index is already at 101. My limited point is based on 3 factors: the cyclicality in the month of August, lack of triggers, uptick in crude, current market valuation, no large trigger. It's difficult to make a earnings now behind us. It's difficult to make a case for a rara rally. So it will not hurt you that if you book profits. I'm not saying that you just go short. I'm not saying that you sell 50% of your portfolio. 10-15% portfolio profit booking, I guess, is healthy if you are in positional trader. If you have a core portfolio for 3-5 years, you can sleep over it, you can digest a 15-20% volatility. I mean, this will be another August.
Yeah, just take it in your stride. Yeah. Okay, so that's the advice coming in from Nikunj as to how one should be positioning themselves. By the way, we're waking up to pretty healthy cues from across the globe. So Wall Street wrapped up the trading session on Friday in the green. We're in the midst of earnings season, and you've got the Asian screen as well across the board reflecting again. The GIFT Nifty, though, is hinting towards a slightly quiet open. But let's put the spotlight on autos. It's going to be all about autos this time around with respect to the monthly dispatch numbers that are set to come out tomorrow. And here's what the street is penciling in. The fact that when it comes to passenger vehicles, you could see a bit of tepid demand this time around. For CVs, the seasonal discounts are going to be at play, and seasonal weakness rather is going to be at play. You've got the discounts as well that are coming. And for two-wheelers, no major push. There's been that delayed festive season. And for the tractors, there could be a sharp correction on a month-on-month basis due to the inventory build-up ahead of the monsoon season. And given, Nikunj, that you've been talking a lot about autos, how they've already been in the fast lane, what can we expect?
No, July is not going to be a great month. I mean, this is not like Diwali, Dashera that you're going to get an uptick in. If at all, given that, there were seasonality was at play, monsoon factor was at play. It's raining in Delhi, you ain't going to go and buy a car. If it's flooding in parts of Bombay, you're not going to go and buy a car or, a two-wheeler. So those purchases, in a sense, will get delayed. Supply chains will have an impact. Consumer sentiment takes dips down when you normally see the seasonality factor or weather factors at play. This is how things are stacked up. Four-wheeler is unlikely to see a revival. And two-wheeler, there is no large trigger which will generate upside momentum. The way I look at the market setup is that in the small car and the sedan segment, discounts are actually inching higher while the demand for PV remains strong and SUV remains strong. In tractor, well, you may be in for a bit of a surprise because the market assumption was that this would be a poor year of monsoon, and given that when you get this forecast, you may have just delayed the tractor purchase. You may have just delayed some purchases in terms of a commitment towards the agrarian economy. I think that will change, and I will not be surprised that if escorts or tractor companies, they come up with strong set of numbers. My limited point here is that if I look at the big picture for auto, July is unlikely to be a month where you will see anything new or any big surprise. If that is not the case, that can the momentum in some of the auto stocks, which really has been the sector of the year, will it sustain? Let's see. But that's how the positioning is.